Hey everyone, stock splits could have the impact of making shares more affordable to a broader set of investors who don't have access to fractional share buying in their accounts. Fractional shares and stock splits also create excitement among investors who draw attention to certain stocks. Three of the most notable stock splits in recent months have been Nvidia, Chipotle, and Broadcom. In this video, I'm going to compare these three stocks and answer which one I think is the better stock split stock to buy if I had to pick between these three. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Nvidia and Chipotle are already trading on a split adjusted basis. You can see Nvidia shares now trading at $128, with Chipotle shares trading at $61. Broadcom, meanwhile, is not yet trading on a split adjusted basis, still at $1,729 per share. It will conduct a 10-for-1 split and trade at a fraction of this valuation when it trades on a split adjusted basis. So I want to compare these three companies on their fundamental critical financial metrics of the business. How much revenue, profit, cash flow are they generating? And measuring by revenue, you'll see Nvidia has taken the lead here from Broadcom, which had taken the lead from Nvidia between 2016 and 2023. Nvidia jumping ahead here with its recent surge in AI revenue, $79.77 billion in the most recent trailing 12-month period, followed by Broadcom at $42.62 billion, and finally Chipotle at $10.2 billion. Broadcom's revenue are likely to move much higher over the next few quarters as it incorporates revenue from its acquisition of VMware. Chipotle will grow its revenue organically, hasn't made an acquisition recently like Broadcom, but the company is adding hundreds of new locations every year, and existing locations are increasing revenue. So Chipotle has solid growth prospects to be sure. Meanwhile, Nvidia continues to grow significantly as demand for its GPUs outpace supply. It continues ramping up production. It continues innovating. It just launched its latest generation technology, Blackwell, which is, as I am speaking, shipping out to customers. And it's already developed the next generation Rubin technology that'll come out next year. So Nvidia already innovating, and it's likely to continue to maintain its lead in revenue among these three stock split companies. Looking at profitability, similar story with Nvidia taking a big lead in operating profit margin, 59.84% compared to Broadcom at 33.5%, and finally Chipotle at 16.71%. However, the trend should favor Chipotle and Broadcom. Broadcom said initially the acquisition of VMware will bring down profit margin, as you're noticing here, the big drawdown in profit margin. But as it digests the acquisition and optimizes, there's going to be over $2 billion in cost cuts. Then its profit margins will return to previous levels, so above 40%. Chipotle also expanding its profit margin as customers return to its locations, and it's supplemented by its takeout business, a business that thrived during the pandemic when in-person dining was closed. The company also several rounds of price increases to offset rising input costs, and the growth of the business overall is leading to expanding profit margins, which should continue upwards towards 20%. Meanwhile, I suspect Nvidia's operating profit margin will come down a bit as competitors launch their own chips. Not to say that those chips will come anywhere near the innovative capability of Nvidia's chips, but they will eat away on the margin at Nvidia's market share, and customers will want to diversify away from Nvidia. They don't like that Nvidia has such a large market share in the AI GPU market. they'll want to give others like AMD and Intel a chance to take some market share so that there will be other options available in the market. All the businesses that need these AI GPUs don't want to rely on one single supplier for their GPU needs. Cash flow from operations to sales is another important financial metric, and Nvidia leads in this category as well, up to 50.8%, taking the lead from Broadcom's 44.45%. These two will battle it out now that VMware is digesting the acquisition. I wouldn't be surprised if Broadcom takes the lead back from Nvidia in this metric over the next 24 months. And Chipotle will lag behind. The restaurant business, not a business that generates strong cash flow from operations, especially if you're not going on the franchisee route. Chipotle owns nearly all of its locations, I believe all of its locations. It doesn't do franchising like Domino's and McDonald's. And that business model generates strong cash flow from operations because you're not investing the capital to open new locations. Your franchisees are investing that cash. And so the cash that's coming into the business is positive cash flow from operations, and then you don't have the negative when you're making the investment in new locations. Chipotle is generating strong cash flow, but it's also using a lot of cash flow to open those hundreds of new locations I highlighted earlier in the video. And so that's weighing on its cash flow from operations and will continue to do so long as the company is in this growth mode, which it has several years to continue in this growth mode. As management has said, it can expand to thousands of more locations than where it is now, given the strong appetite from customers for their products. And finally, I wanted to compare these three on valuation, and you'll be surprised to see that Chipotle stock is more expensive than Nvidia. That's right. When measuring by the forward price to earnings ratio, Chipotle is the most expensive out of these three, trading at a forward PE of 45.87. Second place is Nvidia at a forward PE of 35.6. And finally, Broadcom at a forward PE of 28.62. Chipotle, out of these three, is the only stock I don't have rated as a buy because of its expensive valuation. It's trading more expensively than robust tech companies like Nvidia and Broadcom. Nvidia and Broadcom I have rated as buys, but if I had to pick my favorite out of these three stocks that have split their shares or announced that they will be splitting their shares, I would pick Nvidia. I feel it deserves its valuation premium over Broadcom, trading at a roughly 25% premium over Broadcom. I think it's a no-brainer over Chipotle. If you're picking between Nvidia and Chipotle, Nvidia is the no-brainer. If you're picking between Nvidia, Chipotle, and Broadcom, Nvidia has the advantage, although I do like Broadcom stock as well. So there you have it, 3 stock split stocks. If I had to pick one, I would pick Nvidia. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.